Hello, welcome to this ESS BizTools webinar, where we're going to look at the professional services firm's charge out rate calculator. I'm Peter Towers, Managing Director of ESS BizTools. Many professional service firms need accounting assistance, not just for the preparation of an annual set of accounts and an income tax return. Like all businesses, professional service firms need financial advice during the year. Setting charge out rates which connect with the dynamics of the profession are critical because the individual team members' working hours, their expected productivity percentage, the costs for that person are all very important, as well as the overheads. And overheads for employment can vary. Some employers have negotiated special superannuation payments. So the employee on costs are very important. Yet I find in my observations and working with clients that in many cases, the labour on costs have not been factored into the costs of supplying services to their clients. I think the best way to do this is to set a profit target. It could be based on the value of the business and then a rate of return on that investment, or it could be a predetermined figure that the leadership team within the professional firm have determined. But then everything should be targeted at trying to at least achieve that profit target. In businesses that are primarily selling time spent by their human people who are generating the income. If the firm has invested in the preparation to deliver new products such as advisory services, and you were an accountancy firm, a performance premium could be added to the profit targeted to secure a super profit. So super profits are worth thinking about, and they can work quite easily when someone looks at the return on investment on what they think their investment is and what the resulting profit would be. They say, oh no, we've put a lot of effort into this. We've had extensive team training. We've looked at AI. We've had people go to conferences and we've invested a lot of time in that. We want to earn a super profit. Well, that's all right. Factor that in. So the calculated profit might be 100,000, but the determination of the super profit may well be 150,000. So the target then is to achieve an overall profit of $250,000. And how do we do that from our charge out rates for all of the members in the team, including the partners? Most accountancy firms have clients who are professional service firms. And I've put some of their classifications on the screen: accountants, solicitors, barristers, valuers, engineers, town planners, architects, quantity surveyors, management consultants, physiotherapists, chiropractors, remedial massage, software programmers, etc. and etc. You must have some of them within your clientele. And how do they set their charge out rates? Have you ever had that conversation with them? Might be an idea to have a cup of tea or coffee or something a wee bit stronger and sit down and have a yarn to them and talk about the range of services that you could provide, because you will then be delivering financial, commercial services to assist your clients. Completely different from income tax. Income tax is important because it is a tax owing to the government, and your clients know that they have to abide by that. Otherwise, they've got problems with the tax office, and no one wants that, do they? But there's a whole range of other issues confronting your clients every day, whether they're professionals, tradies, retail store operators, farmers, whatever they are, that have really got nothing to do with income tax. Who supplies the financial and commercial advice on those issues to your clients? Now, if you can clearly identify that and know that someone is supplying it, that's probably all right. But at the same time, I think it's might be a detraction from accountant services generally, because accountants have finally realised as a broad professional group that providing realistic advisory services to SME clients should be an activity that is claimed by accountants as being work that our profession can perform. Yet, unfortunately, I find evidence all around Australia that many accountancy firms are not delivering it. So my challenge to you, are you interested in delivering these types of financial commercial services for the benefit of your clients to improve their business performance, especially in the difficult conditions we're in at present? So how many professional service firms do you have? I hope you've counted it up by now. And how do they determine their charge out rates? I think your first activity under this general banner, or maybe I should say the second. So the first activity is getting their charge out rates right, but then making sure that there's going to be financial data prepared daily, weekly, monthly, which allows the assumptions to be checked so that fine-tuning can take place if need be. Our recommendation is that you suggest to your client the introduction of the 52-week business enhancement system, because this will give real information to your clients on a daily, weekly, monthly basis. So there's significant opportunities for you to help your clients to improve by proactively advising them of all the services that I've just discussed. Recently, we had a webinar presentation that featured Amanda Gascoigne, a well-known accounting industry advisor. And we were discussing the tradies charge out rate calculator, which is the sister product to the professional services firm's charge out rate calculator. When Amanda said in the middle of the webinar, "I love the ESS BIZTOOLS tradies charge out rate calculator." And I'm sure if she'd been presenting the professional service firm's charge out rate webinar, she would have made very similar comments. So the key components of the professional service firm charge out rate calculator are the applicable labour on costs that apply, wages and salaries being paid, the working hours, individual productivity percentages that your client is anticipating that team members will achieve, and the overhead expenses of the business. So looking at it, and we go on to show you the calculator shortly, you'll see that we've got the labour and labour on costs forecast for the year, the budgeted overhead expenses, the targeted profit for the year, including any premium, creating a super profit, projected income to be generated by each team member, including partners, and the financial forecast then gets reconciled with the targeted profit. The 52-week enhancement system starts off with a weekly report. It's an opportunity for you to introduce an ongoing system to assist your professional clients. Now, the weekly report is basically the report on what happened this week, but also a budgeted profitability report. Many larger businesses in retail, wholesale, and the professions prepare these types of reports as a matter of practice. It's part of their system. It's their culture. You can introduce the same approach to your clients, so that at the end of the week, if there's been a problem, if someone that was budgeted to achieve a productivity of 70% only achieved 44%, an inquiry should be made. What happened? Why did it drop? And there could be a legitimate reason. But it may unfold that the 70% was unachievable because of the extra administrative duties that person's been allocated. Now, there could then be a decision made, of course, to strip some of that administrative functions off that person, because he or she is far more valuable as a fee producer, achieving 70% productivity, and to allocate those administration duties to someone else who is not so productive or is easily able to achieve their productivity target and has volunteered that they could do more admin work. But at least it allows that conversation to be held, because it's been highlighted that something didn't occur to what was expected. So the weekly performance report can be analysed. It's one of the key performance indicators or business metrics for a professional firm. What did we achieve for each person? What was their budget? What was the shortfall or overproduction of hours? What was the end financial result? Were we $1,000 behind for the week or $3,000 in front? Because some people improved their productivity. Isn't it far better for your clients to know this week by week during the year than at the end of the financial year, when you prepare the annual accounts and the tax return, you indicate to them, oh, your turnover was down a bit this year? It's too late to fix it then. It's too late to go back and do the post-mortem as to what went wrong during the year. It's best to do it promptly, fix it, and perhaps change the budgets. Change the charge-out rates. If quotes have already been issued, it's too late to change that, of course, but for the future, it's very important. So the key idea is to compare the targets, the budgeted figure, whatever those productivity percentages are, and the working hours. Working hours can change for some people during a year. And someone forgot, oh, what's that going to do in the overall scheme of things? What changes need to be made? What fine-tuning? And then we can move in the preparation of monthly financial accounts that are very important, but they're not as important just on their own. They need this other infrastructure of KPIs, business metrics, budgets, cash flow forecasts, the business plan, all being part of the composition of the business. This is the real financial commercial advisory services at work. So the preparation of the individual performance showing chargeable hours and productivity percentage. You can review the assumptions on which the charge out rates were determined. So we're now going to link across to our website, whereby I can share with you the ESS BIZTOOLS website. And I'm going to, on the left-hand side here, we have the full list of all the product packages within ESS BIZTOOLS. We also have sections and papers. There's 580 odd papers there, covering about 65, 66 different subject headings that our subscribers badge and send to their clients. We have government grants. We write up government grants. We prepare an update of government grants each week on a Monday and send that round to our subscribers so that everyone's familiar with changes that are occurring in the Australian government and the various state and territory government grants. And we have 4 packages here, their main packages, which are up here. So we start with the advisory intro package within ESS BIZTOOLS. That's our entry. It is primarily targeted at bookkeepers and accountants who have not previously offered any advisory services. They could well be the group of accountants and bookkeepers that the recently retired tax commissioner was addressing his comments 2.5 years ago when he urged accountants to become the trusted advisor, to really look at work levels and what you were doing because of the uptake of new technology and new software by the tax office was going to severely reduce the amount of work that people would require from tax agents and accountants offering wage earner and very small SME client work. So if you're in that category, you might be interested in our advisory intro package. It'll get you started. And you could then step up into the starter package. Starter package is ideal for an accountant who has been offering advisory services, but now likes this concept of delivering financial commercial services to your clients. And then it all gets rolled over into our advanced package, which includes a whole range of chief financial officer service material, business planning, capital raising, research and development, the full package. And then we go into the financial forecasting package, which includes everything in the three preceding packages, but also includes more on the performance of the chief financial officer role at board level or board of advice level. And also we have available access to the Plan Guru software, where you can utilize this wonderful software product to produce budgets and cash flow forecasts. Now I'm going to move in now, and we're going to go to the budgets and cash flow calculators. We have three main calculators within ESS BIZTOOLS. We have the setting retail prices. We have the tradies charge out rate calculator, and we have professional fee termination. So I'm going to the form that I know is the form for the apologies, I just seem to be having a bit of a computer problem here. Okay, well, we've got it now. We'll move it across. And we've got fee setting for professionals. That just took a bit longer than normal. Our computer package really wasn't designed for presenting webinars on all the time. It's not more suitable if someone's sitting in office working on this. But here we are. We've brought across the paper on the setting professional fees. It goes through and looks at what this process is all about. So this is the guidelines for you that you can go about. So we're talking about setting professional fees is a difficult step. It's not just the price. There's some charge out rate fallacies that apply to all sorts of businesses, tradies, professional service firms, of course, but could also apply to concepts of retailers and what they mark up by. So there's some notes there which you might find interesting to share with your clients. Services are very important, of course. Turning up on time. How a client, patient, member of the public is greeted in your reception areas is very important. And same with your clients who are professional practitioners. How well is that greeting extended? Does the visitor, the patient, the client feel welcome? So there's some notes there on that. I think it's a good idea to encourage your client to keep files on competitors so that they can evaluate them and probably learn and determine what direction they're heading in. What's the practice's overheads or the professional firm's overheads? And to control their overheads, they need budgets, they need a cash flow forecast. And then we're going to have the periodic financial accounts and looking at revising the overhead costs throughout the year. And if there's big changes, you would then say to your client, we should review the charge out rate calculations. What differentiates your practice? Location, the initial greeting, how a new client is greeted and handled, brochures, handouts, information, the team training that your client's team are getting, team being alert to marketing strategies, the office presentation, the team dress and presentation, seminars, information being supplied to the clientele or the prospective clientele. Team classifications. We generally talk in partners, managers, seniors, intermediates, but can vary, of course, for some of your clients. And in the calculation charts, we have not inserted any of those classifications. You can insert which ones apply to your clients. For labour productivity, we're suggesting timesheets are maintained, but your client's probably already got a system on that. Targeted net profit, I've talked about that before, so you can read a bit more about that if you wish. Professional firms charge out rate calculator. We're going to go through that now. So I'm just going to quickly show you this because there's detailed information on what we're going to look at in the chart. So I just want you to know that that is there so that you can look at this. Obviously, if you're a subscriber to ESS BIZTOOLS, which you hope you agree to be, to have this service package, you can subscribe for it on its own if you wish, or it's part of our overall product packages. So this is showing some of the calculations that are made in the spreadsheets. So I think we've probably looked at that enough, and I just want to go into okay, so the form has come straight up. So we're going to click back on to so at the beginning, we've got the professional fees calculator. You would insert your firm's name, who you prepared it for, and date it. We've got some instructions which you can read, of course, and that explains how this chart has been prepared and takes you through the process. And that paper that I just showed you correlates to how this report is prepared. So the first area we go to is the calculation of labour on cost. Now, what we have provided, I'll just move back, is labour cost calculators for the three main categories of labour: full-time employees, part-time employees, and casual. And then within each of those, we have provided 36 opportunities to have variable rates. So what I mean by that is, first thing, so up here, you insert the classification. This might be the partners. And then you'd only have other people mentioned there if whatever these on-cost calculators for the partners are exactly the same for other team members. If it's identical throughout the firm, you would just have the other categories of people there. And then what you'd be putting in is ones that have got different salary ranges, which I'll show you why in a moment. So annual leave, you might insert there 20 days. Presumably in a professional firm, there's probably, well, there could be in the medical type areas, of course, there's like a shift work payment. We've made provision for it. The holiday pay loading, is it paid to all classifications or only the some? The statutory holidays, is everyone getting the 10 days? The personal carers leave, you're anticipating that everyone's going to take their 10 days, or you may not want to budget for that many. And you can insert there 5 days if you only want to budget for 5 days. What's the superannuation? The general rate is 11.5%, but some people have negotiated to be paid higher than that, might be 14 or 15%. And that could then be one of the big variables, which is saying that this list here is only for that one group up the top here, let's say partners, because they've decided they're going to pay themselves superannuation at 15% and everyone else is going to be at 11.5%. The payroll tax, if it applies, whatever the general rate is when you calculate it, work care the same, training. Now this can be another one of the big variables, because different training regimes, you might have the partners, and I probably should have always put stroke professional development, but they might be going to have 10 days a year on training professional development. The general team might have 6 days, but there could be some select people that are going to have 20 days. So you can use the chart to just insert that. Long service leave depends on the state. I think you should provide for long service leave and build it up, and perhaps put the money into a separate bank account so that you've got something building up to accumulate the long service leave payments when they are due, because they can build up. You can then do the quick calculation. If this person is a full-time, they're working 52 weeks of the year, they're working 5 days a week, so the calculator will then show there's 260 days. The system will then transfer down what the annual leave, statutory, etc. So it will calculate what the net working days are for each group. It will then calculate the holiday pay loading and the long service leave, and it will then calculate the on-costs on an annual salary. So we've got superannuation, payroll tax, work care, long service leave, holiday, and will determine a figure, which generally is somewhere between 17 and 23%. And that will vary across the page, and that figure gets picked up when we go to the labour calculation. So that's the on cost. It's very similar when we go to the permanent part-time employees. In fact, that calculation is exactly the same. And the system then calculates the information on the hours that person is going to work. And then we have the casual. Casual is a bit different. We're only providing for superannuation, payroll tax, work care. And it then calculates the on-cost with casual staff. So we then go to the labour budget. Now, the labour budget is reflected the same way as it was back in the labour on cost. So if we just go back to the top there, I should have pointed that out when I was there, but I omitted that. We have numbered every line. So A11, A12, A13, A21, and so on over there, so that when the information gets transferred down into here, the system automatically transfers what classification you've shown. So we said partners at A11 will be there. You insert the number, it might be 2. The gross salary they want to pay themselves is $190,000. System then does the calculation. The system transfers the labour on cost percentage from the labour on cost. Remember, we talked about that. That's that figure that would be added there. That's transferred into the labour budget. It does the calculations. We've inserted the hours that have been paid for back in the labour on-cost calculation, and we've identified the leave that people are going to have. So what's their net hours worked? Then it is up to you and your client to introduce the productivity percentage. What productivity percentage do partners expect? Now, if you've got 2 partners and one's the admin partner, and the admin partner says, well, my productivity will only be 40% because the rest of my time, that person would be listed on a separate line back in the labour on cost, because it is variable. And that's a good way to pick it up, because the other partner might be quite happy that his target is 65% for productivity. The system will then calculate what the chargeable hours are going to be, what they are for an individual, and what's the total. total for that line. Everything gets transferred depending as to whether people have been called full-time employees, and each gets added automatically. The part-time employees get transferred in, the same with the casual staff, and then the system calculates the total to show the productivity percentage. We then have to insert the return on investment or the profit that you're looking for. If you know that the partner's not worried about the return on investment, they want to make a $260,000 profit, you just insert $260,000 there. But if they say they think their practice is worth $500,000 and they'd like to earn 20%, it would just show $100,000 as being the profit target. We then have the projected overhead expenses. In practice, I'd suggest you type them in and the amounts so that it is able to be analysed on the month when the monthly accounts are prepared. If you want to shortcut it, all you need to do is type in there what you think the figure is going to be based on previous year's accounts, 691,000 or whatever, and that will then get factored in. The system will then determine the targeted income because we've got the total labour cost, including the on-costs. We've got the targeted profit and we have the overhead expenses. That's the total. You can make an allowance for write-downs if you wish. And there was a calculator back there that I missed. It was probably hard up against the left-hand column and I didn't notice it. So you can put that in. You might have a 5% write-off or whatever. And the total income to be recovered from employee or team member charge-outs is then determined. We then go through some calculations of the time cost. So this is the salaries to be paid, the hours to be worked. That gives us a base cost per hour. We've then got the total chargeable hours. So the base cost chargeable hours can be determined. These are just for the mathematical calculations of the charge outs. We then have the calculation of time costs. Which are calculated, I've just been through them. The professional charge out rates are then determined by taking the base cost per hour and multiplying it by the professional practice. Missed that. So here's the professional practice overhead factor, which is the overheads divided by the work hours, and we've got the professional practice overhead factor. And the system will then go through and look at the base cost per hour, the professional practice overhead figure, and that will be the calculated overhead expense, and it rounds off. So you always get a variable, but it rounds it off to the closest dollar. We then produce a proof of charge out rates. So again, using these numbers, A11, A12, A13. So the report will have some figures there, then down here and down here, so that you can see, you can trace back and do an audit exactly where the information come from in this overall system. And it will total that and tell you that's the practice income. And then the report will be prepared saying this is the budget. The professional fees are projected to be this. If there's an allowance for write-offs, we have that. So our net fees are this amount. The labour, total labour cost and on cost. So the gross profit is the amount shown. That's the overhead expenses. This will show what this calculation is saying the budget of profitability is, and that will be compared to the target of profitability. And I think we said 100,000, didn't we? 20% on 500,000. So the figure here may have come to 102,000 because there's some rounding off occurs. But what you've got for your client then is you can sit down and go through with them and saying, okay, we've now charted what you think is going to happen this year. Now, do you want to do some fine tuning? Do you think the productivity percentages are too high? Do you want to take them down a shade? Or do you want to do some maneuvering? You can do it on the chart very quickly. And you are then in a position to say to your client, we've now got all the information. There was one other thing that I just wanted to bring up. We do have a long service leave calculator working on the equivalent days for long service leave based on the different state jurisdictions. So that's the overview of the professional service firm charge out rates. Set up, once you understand and you've thought through where the various team members are going to be identified, it's a job that you can prepare for your clients and sit down and have some discussions with them, and then review back to see how the process is occurring. So I now want to move on and look at all this documentation that we've talked about in the professional service firms charge out rate calculator. I get asked at times, well, what are we going to generate in fees from this sort of work, Peter? And I've used my knowledge as a professional accountant. I've been the senior partner of an accounting firm. I've been the chief financial officer and company secretary of a listed public company. And I was an advisor to a major Australian government program called COMET, Commercialising Emerging Technology, whereby we helped people who had developed new ideas, new technology, to get themselves into an investment-ready status to be able to raise capital. In a lot of those functions, we had these sorts of calculations had to get done so that we could bring some reality into the forecasts that some people were doing. Sometimes they were virtually talking about 130% productivity. So I've gone through and looked at it. I believe that you could use this calculator to earn a fee of $1,000 to $2,000 per assignment that you undertake for your client. It does depend how many team members they got, how long it takes to be inputted, and also, of course, how long you sit there with your client doing the what ifs. And I would encourage you to do that so the client can see what all this means, and they get this real appreciation of the real linkage between the productivity percentage and what's happening. I think also that some of your clients might be a bit surprised. Maybe the charge out rates are a wee bit higher because we've really included the labour on costs, and they haven't got much room to negotiate there, really. They may have a bit of flexibility in saying, well, on that personal leave, none of our people take the 10 days, so we only want to budget for 3 to 5 days. Okay, fair enough. And some of them might say, well, only about 40% of our people will be here for the 10-year period for long service leave. So we might not start that until someone's already worked for us for a few years, like 3 or 4 years. Then we'll start building in the long service leave. There's some of the flexibilities that you can build into the system if you wish. My preference is you encourage your clients to factor in all of the costs, including the long service leave and including the personal leave calculations at their stated amounts in the legislation, because someone will be having their full amount. Because invariably you will find that there will be productivity issues at various times of the year, and there will be some fluctuations. But that's a guide for how you might go about doing the charge out rate calculator. So let's now look at what you could do with this. Oh, incidentally, the 52-week business enhancement system, as I've discussed earlier, one of our clients in the trades area, which is a similar product to this one, except that in trades we've built in a provision for purchasing products on behalf of their clients, furniture, air conditioning systems, lighting, etc., that the builder goes out and gets themselves and puts straight into the house. They normally charge a premium for that, so we've built in that premium generation and what they might do with that. But one of our subscribers, when he first came to me some years ago, he told me he had 10 tradie clients, but he'd heard that we'd developed a tradie charge out rate calculator. He'd heard a webinar which Andrew Geddes one of the founders of the Financial Management Research Centre, who originally developed similar material to this. We've enhanced it over the years with Andrew Geddes' approval. And Geddes said, well, go and talk to Peter Towers because he's developed it. So this guy come to me and said he's got 10 clients. He's now got 120, he tells me. And he tells me that he does their charge out rates, but he also insisted that they either get monthly or 3-monthly accounting, and they're going to sit down and really review all the key performance indicators and the business metrics and look at what the productivity percentage figures are for each group of team members and make adjustments as required. He charges $8,000 to about $12,000 extra per client for that service. And that's in addition to the fee that he always charged, or they always got charged for the preparation of their annual accounts and tax returns. So they're still paying that, whatever that happened to be. So with 120 clients paying him around, I guess, an average on between $8,000 and $12,000, say $10,000 extra over and above what they were paying, this has now emerged for that particular accountant as a very successful $1 million activity business. What could you do with professional service firms? No one's really come to me and give me the answer on professional service firms. That's really why I raised it then, taking the opportunity to plant the idea. How many dentists, how many doctors, medical doctors, how many physiotherapists? And a lot of those are similar types of firms, of course. And if they are charging for other products, which some people are, of course, aren't they? My physio person that I go to sells me bottles of things to rub on to stop my back aching so much when I'm playing golf. Well, that's a product that's been sold. We could factor in markups. So you could use the trades charge out rate calculator if you wished for those sorts of professionals. One day when I've got nothing else on my agenda to do, I think I'll go back in and change the professional service firms and put that in there as an option. Does this client buy in products and then on sells it? What's the average markup? And we could probably do it in a number of categories of markups when I think about it. If you've got any other suggestions on that, I'd love to hear from you. What would you like to see in a product like this to suit the sort of professional service firms clients that you've got? I'm quite happy if you can send me a note about that, peter@essbiztools.com.au, and I'll give you my phone number near the end. And if you like, you can give me a call and we could have a complimentary Zoom discussion. And I could then make changes, because that's what we do in ESS BizTools. I rely on our subscribers coming back and saying, Pete, why don't you do this? Pete, could you add this to it? And that's what we try to do. So that might give you some idea of how you can put it. Now, we have started what we're calling a Biz Aid by ESS BizTools program, because I'm very appreciative that the SME heartland in Australia has got a lot of problems at present. Interest rates are high. And I don't know if you read Jerry Harvey's comments that were published in the News Limited Press a couple of days ago, that he envisages, after 60 years as a very successful retailer and ended up a billionaire, started off selling vacuum cleaners when he was 15. He believes that in 5 years' time, we're going to be in a very difficult situation. Now, he's blaming the federal government and state governments for all sorts of added costs in unproductive areas. So they're spending a lot of money in hiring people in areas which is not producing income. It's not the private enterprise world. So if Jerry Harvey, and he's been around a long time, and he's a very smart man, I gather, is making those sort of predictions, I think we've got to realise that our SME clients are going to have some real difficulties over that 5-year period. In fact, it's not going to end in 5 years, according to Mr. Harvey. It's probably going to be at its peak, this problem. He made no comment that I saw about what would happen if there's a change of government, but that's something that will get factored in at that time, I suppose. So the Biz Aid campaign is where we've reduced our prices to try to encourage accountants to offer more service to your SME clients. Hopefully, they will be able to afford that so they can get the assistance to help them survive and prosper during this difficult time. So our special offer for the package I've just shown you is it's based on a 50% discount for the 12 months upfront package, and that will cost you $150 plus GST, not per month, but for the 12-month period. 150 plus the GST, so $165, and you will have access to that product. You will also receive our Business Plus newsletter and some other associated articles, and you at any time can upgrade to another subscription package that's got a range of other products in it as well. But that is the offer which we're making for the professional service firm package. So how many professional firm clients do you have? I asked you that a little bit earlier. Perhaps you may have thought about it as you're going through it. How many of these clients would you expect to retain your services for a professional service firm charge-out rate? Would it be 70%, 80%, or only 50%? You do the sums. What's your rate of return? I'm sure it would justify you spending $150 on this tool to get started. So if you're ready to take action, and I hope you are, please go to our website, www.essbiztools.com.au, click on packages and pricings, and then click on the individual products. And this one will say professional service firm charge out rate calculator. And then you can complete the subscription order form. So if you need more information, if I've missed something out or skated over something that you really wanted to know more information about, please send me an email, peter@essbiztools.com.au, and we will respond to your questions, or you can telephone me on 074724 118. I'm not always here, and sometimes I am locked away in writing new material, but I will get back to you. Just leave a message and I will get back to you. So thank you very much for your interest in ESS BizTools and our packages. And I hope that I've been able to convey to you our enthusiasm for the professional service firm charge out rate calculator. And if you can use it to generate professional service fees from your clients, I hope you'll make contact with us and take advantage of this special offer, which is available for a bit over another week, and then it will be withdrawn. Okay, thank you very much. Have a great day. Goodbye.